Yesterday was a big day for the markets, a lot of information. What I'll try to do in this short presentation is to translate everything that happened yesterday. First and foremost, the easy stuff, like the fact that the Fed lowered interest rates. And now, when we get to the summary of economic projections, those numbers were fairly solid for the overall market for that snapshot that the SEP is for the market. What do I mean by that? The end assumptions for 2025, GDP of 1.7%, that's up from the September reading. Unemployment, 4.5%, that's unchanged from the September reading. PCE, 2.9%, that's down a tenth from the September reading. And core PCE, down a tenth from the September meeting at 3.0%. Now, also, and this was the variable in all this, is the QE, $40 billion of securities starting December 12th. So starting tomorrow, the Fed will begin to buy short-term securities, probably 3 years and under. Now, the dissenters were Austin Goolsbee, that's the new one, and Jeffrey Schmidt. They voted for no change. And of course, Stephen Myron, in line with the Trump administration, voting for 50 basis point cuts. Interesting though, starting in January, Beth Hammack, Lori Logan, Anna Paulson, and Neil Kashkari all become voting members. So remember, that's going to change as we move into the next year. This morning, the percentages for a January rate cut, only 20%. 40% into March. Now, finally, when we look at the rest of how we see interest rates going forward, watch the big numbers. What do I mean? The US dollar has worked its way lower. 10-year yield that got up to 4.2% is now 4.12%. That's working its way lower. Crude oil that spiked because of the issue in Venezuela is now back down lower. Inflation is steady. The labor market is the focus, and that leads for more interest rates. Jerome Powell wasn't going to guide to that. Doesn't mean it's not going to happen. This was a dovish cut and should lead to a better end of the year.